Good morning, Hedgeye Nation. Welcome to another episode of Sector Head Spotlight. I've got the one, the only Emily Evans here with me. And guess what? They can suspend me on Twitter, but they can't get rid of me in real life, baby. I am back, so if they're telling me that my normal followers and all that kind of stuff is supposed to be restored in an hour or so, but I was suspended last night, Emily. I got home from dinner and to like 30 text messages and all sorts of different stuff. But hey, in real life, I'm still here, you're there, and we're gonna get the pleasure of talking all things healthcare, health policy, mortality, disability, inflation, all sorts of fun stuff. So Emily, thank you so very much for joining me. It's an absolute pleasure to have you, and thanks for dialing in from Nashville.
Well, thanks for having me. I'm looking forward to this.
Absolutely, me too. So just for those at home, just as a kind of quick reminder, this is our 6th episode of Sector Head Spotlight. If you want to go view the other ones, they're all up on the Hedgeye TV YouTube channel. And you know, the way that we kind of been doing this, Emily, is reviewing a bit of each sector head's background, kind of how they kind of came to be and discovered Hedgeye and what have you. And then going into a bit of your process / I know you're a hair different on the policy side, so I think we'd love to sort of go into your background or expand on your background a little bit more in regards to kind of your public, your work in the public healthcare space, and then also I know you were on the credit side as well. So yeah, and then we'll kind of finish with. This slide is amazing. Just the death.
You like that, huh?
I love that. Death and vaxxes, baby. Anyway, so we'll kind of finish it off with some overview of just what you're seeing in the health policy space. But with that, Emily, if you don't mind, perhaps a little bit of a background. I mean, you can either start with how you came to be here at Hedgeye, or go even further back in time if you wish.
Well, let me just kind of highlight my background, which is
Sure.
fairly eclectic. And as a result, I think people sometimes get something different than what they expect. So I came to Wall Street out of college, directly into the credit space, as you mentioned, specifically municipal finance. Municipal finance, of course, is the main vehicle that healthcare systems use, because the majority of healthcare in America is delivered through nonprofit health systems. And I worked for a small boutique shop in New York City and spent a few years trading, but ultimately that path took me to a large regional broker dealer here in Nashville called J.C. Bradford. And I spent about 11 years financing all kinds of stuff, but we were known for healthcare financing. So healthcare hospitals, what we call continuing care retirement centers, skilled nursing facilities, and so forth. And the firm was, because Nashville is a healthcare town, HCA is based here, and a lot of things have spun out of HCA. The firm itself was fairly well known for its healthcare financing and acumen there. We were sold, and so many people on Wall Street will appreciate this, to PaineWebber, and then quick succession, a flip to UBS. And I decided to take some time and just figure out what I was going to do. I got drafted to run for local office, and so I spent 9 years in local office. And you're a generalist when you're in local office, and by way of that, Nashville local politics is nonpartisan, so you don't register as a Democrat or Republican in this state. We have open primaries, and our local offices are primarily nonpartisan, which suits me very well, because I'm really not super interested in partisan politics. I like what works, and whoever happens to come up with what works, then I'm your friend. But so I did that for 9 years, and as I was leaving office, we have term limits here in local government. I was ready to kind of spend more time working, and I found Hedgeye through a kind of fortuitous set of events, which we don't need to go into, but I've been here since 2016, and I've been focused still on healthcare, but I get to add to that the elements of politics that I've learned over the years, and I'm unique in the sense that I've actually practiced politics. I don't read about it. I kind of have lived it, and so when I see political trends or I see activities, I'm able to interpret them in ways that people who may just observe politics can do. So that gives me a fairly unique advantage in this space.
Yeah, absolutely, and you're spot on there in terms of, I think there's a common thread here at Hedgeye, is that we really are nonpartisan. We really don't give a shit until we really just care about doing the person who's doing the best job, right? And I know Keith's Canadian, I'm Canadian, now a U.S. citizen myself, but yeah, I mean, it doesn't matter to me whether it's Republican or Democrat. It's really about getting the right person in office in order to get the job done. So yeah, I think you definitely get a little bit of heat there, going either more liberal or more conservative, and that's just not really the case, right, Emily?
No, it's not. And what happens typically when that happens is somebody will take one snippet, one note, or one paragraph, or one sentence, and they'll extrapolate it into their own personal views, either as in opposition or in favor, and that's not. If you read everything I write, you know that's not the case. And what I say, I've been as if you're behaving incompetently in office, and there's plenty of that to go around, I'm going to point that out. And there is, and most people don't appreciate this, there actually is such a thing as policy development, and developing that in a rational, nonpartisan way. Now, the decisions on what parts of policies to adopt, or whether to reject this idea and accept that idea, there is a political element to that. There's no doubt about it. But really good policy development is all about presenting options to the principal, which is what political people call the governor or the mayor or the president, presenting them with options and the upsides and downsides, and helping them appreciate, what the consequences of their choices are. We've entered this era in politics and where there is no real policy. It's all politics, and everything is framed through a political lens, which is why you're seeing such gross incompetence, from the government. I mean, that, and they're not going to work. But train derailments happen because things don't get inspected. Drugs get approved because we just want to show that this works. There's myriad of examples along these lines, but that's where we are at the national level. I'm happy to say we're not altogether there at the state and local levels, but at the national level, that's where we are.
Yeah, so just to expand on that, Emily, where would you say, like, the biggest, I guess, delta is between the more local, which especially on the healthcare side, what's happening or transpiring on policy on the more local side versus what's happening on the federal government side?
Well, this is a really unique period in time. What we're seeing is, and particularly in the state governments, we're seeing them step into the shoes of the federal government and offer their own policies that may run counter to or not in sync with federal government. The most obvious example of that is in Florida, where the Surgeon General, Joseph Lebedeau, has said, and he wrote a letter yesterday reiterating that. He's like, we have our own data, we're doing our own analysis, and we have concerns about vaccines administered to young people under 30, under 40. And because of that, we are recommending against administration of those vaccines. That is different from what the FDA is saying. So when you're a person living in Florida, or a physician practicing in Florida, you're being asked to turn your attention away from the FDA and the CDC and towards your own Surgeon General. I don't know of another time that's happened since, say, the Civil War. But that's the trend you're seeing. Governors are taking matters into their own hands.
That's fascinating. Yeah, I actually didn't realize that was still ongoing down in Florida, the Surgeon General down there. Yeah, it was very headline news a year plus ago, right, when he came out. But I didn't realize that.
Well, and people are interpreting his actions through the lens of politics. Oh, you're just doing this because, Ron DeSantis is running for governor.
Right.
Which is kind of, I mean, if you take that line of thinking forward, what you're really saying is this physician, this well-credentialed physician, and this governor actually do not care about the health of their constituents.
Right.
And let me just assure everybody, you care about the health of your constituents. If they're dead, they don't vote. And so you absolutely do care. But that's just for people to think about. That's the lens everybody is viewing things through. Is not that this governor or this Surgeon General cares about his constituents, but that they're trying to prove a point, at a national political level. And hey, maybe they do that. Maybe that's a bonus for them. But it represents sound policy for a host of reasons.
Yeah, and I think that's probably a good segue into some of your slides that you shared with me in terms of kind of just what you're seeing out there in regards to excess deaths, population changes happening, and again, it all influences obviously not only health care but also health policy. You came out with a great, I think that was last week. You did a great presentation deck on Humana. And sort of what's transpiring there in that side of the healthcare world, but do you want to kind of go into some of the slides that you presented or that you shared?
Yeah, sure.
Okay.
Why don't you pull up? Let's start at the beginning because the implications here are not just for healthcare, but actually for all of the American economy and really the global economy. And Jay Powell, in his really last two appearances, has reiterated that. The street, I think, was, maybe it's different today, but in a good bit of denial. But America and other countries as well have suffered through a lot of excess deaths. And this slide shows all excess deaths. And this is, all-cause mortality in 20 through 23, minus the baseline, which is the average 2014 to 2019. And as you can see, we've got a total of 1.8 million people, or about 50 bips of the U.S. population. Not just a massive, when you consider there are 330 million people living here, but still a fairly significant loss of population. The CDC's data is a bit of a mess, which we don't need to go into. But there's another 200,000 to 500,000 people that I'm having trouble reconciling through the different databases. So the number 1.8 could be a bit higher. This does include COVID, of course, which killed about 1 million people. But as you look to the right of the chart, you can see the excess deaths are persistently high, even though we really have seen very, very little COVID death here in the latter, certainly the latter part of 22 and now into 23. Less people, of course, means less workers for healthcare, which is driven almost entirely by labor. It also means less workers for everything else. And this was the point Powell was making. This was a few months ago, and he said, 300,000 people died of COVID, and that matters. The number is actually much higher, but he's right. It matters. It has implications for the labor force going forward, barring any change in immigration policy.
So are you somewhat, if we're looking out in time, are you expecting that to kind of sort of trough here or like level out? Like what's the...
That is unknown.
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 Right.
We now have three publicly traded companies recognizing excess death as impacting their operations.
Yep.
DaVita was the first in 3Q saying, we've seen mortality go up and down with COVID, but now it's just staying there. It's persistent. And you can see that in the data. Mm. And then we had Humana saying, they credited to COVID, excess COVID deaths, killed a lot of people with comorbidities, and therefore our benefit costs should go down as a result. And then yesterday, Service Corporation International, which runs huge funeral home business, did something they haven't been doing, which is they recognized their performance, which is correlated to death, obviously. Their performance is a result of COVID and excess deaths. In other words, they've now started to separate out what was a pandemic from what seems to be an ongoing structural issue with the health of Americans. And we'll hear more about that. We'll see more about that for sure.
Yeah. So how do you see that kind of influencing? Like if we go down to, you've got population change, underemployment. I mean, so if we kind of expand on that Powell comment you made in regards to his commentary on the impact to the labor market, do you mind I think it's maybe go to slide 5, Celts, and we can. This is the population change and shifting there.
Yeah, and this is another part of the pandemic response beyond the COVID vaccines. You have had, because of the draconian, never before tried interventions, primarily in blue states, not entirely, but definitely primarily, which happen to have a lot of population, so it's important. Those states have been losing population throughout 2021 and 22. And you can see the right-hand map, that is absolute population change, coming out primarily New York and California, who were politically two leaders on the interventions like school closures, business closures, et cetera. And you see where they're going, Texas and Florida. And then the slide on the left, that's change in population. Same deal, Texas, Florida. It looks like South Carolina's benefit. I don't know what they're doing in Idaho, but the base number is small, so that definitely is having an impact. But when you take and I compared this at Hedgeye Regional in Miami, I compared this to the effects of the Black Death in England in the 14th century, in which inflation and compressed real wages lasted for 50 years. We've got many more modern tools, so 50 years is not likely to be the duration of the effect. But when you have a nurse who moves out of Florida and into Texas, that's one less nurse to take care of people in Florida, and she finds a job very easily in Texas. So inflation pressures in Texas are a little bit lower, and they're a little bit higher in California, and that's a phenomena that's probably going to persist because there are other reasons to move to Texas and Florida and South Carolina and Tennessee, and that's the economics, the tax code,
yep.
And they're just I'm biased, but it's we got to carry on through most of COVID, and it shows in the local economy.
Yeah. And so then if we go, why don't we just go to the next slide? So why don't we go to 6? Because I think these are really important data.
So this is the other effect on. So you have mortality, number 1.
Yep.
Number 2, you have migration, and number 3, you have disabled workers. Now, a lot of people have cited this and gone, "Oh, these people are disabled." The federal law changed, so it's easier to get a disability, often by claiming long COVID, which is a very ill-defined term. And I know that's not, make people happy politically if they have a view of that, but it isn't defined. And the NIH is now struggling, or has been struggling, to develop a cohort they could study, and I have a family member in one of those studies. So that's how I'm keeping an eye on it. But you had a federal change in federal policy and federal law that allowed more people to take disability, and they did. And that's another many more million people. So we have about 7 million people, versus about 6.5 before COVID out on disability. A disabled worker generally is subject to a 20-hour-a-week cap on their work, unless they go to the cash economy, which a lot of people do. And this is also taking people out of the workforce. And those 3 components, how are you going to ever see 2% inflation when you have a shortage, a structural shortage of workers, especially if you're the governor of Florida or the governor of Tennessee or Illinois, which happen to be some of the biggest economic powerhouses in the country. How are you ever going to get to 2% unemployment? And I would argue that you're not, potentially not in my lifetime, and that makes the whole picture. So I've been you can imagine I've been laughing through the whole pivot thing, right? Like, yeah, right.
Yes, yeah, because this data tells a completely different story, right? It's
yeah.
yeah.
This is structural, and like I said, barring an immigration a change in policy there, which I would expect everybody should expect, because it's the only way out. And we saw this in the late 19th, early 20th century as the United States was industrializing. What did we do? One, we made sure that anybody who was African American who could get out of the South, and the South was, pretty bad about letting people get on trains and get to Chicago. That was one route out, and then number two, we had massive, nearly unregulated immigration until 1921, and that was, I'd argue, one of the things that made the U.S. a industrial powerhouse throughout the 20th century. We kind of have unregulated immigration now, which, for those of you who think I'm a Republican, ask me about my immigration policy. You'll be surprised.
You can't put us in a box, Emily. You can't put us in a box, right? Yeah, they can try, but yeah. So this is, again, phenomenal. I love these charts. So going back to slide 7, so it's on healthcare runs on people, and the dynamics that are happening there. I mean, it all flows together, and it ties beautifully into your overall theme and view on what's transpiring within healthcare.
Right, exactly. This is the really, really deep quandary healthcare finds itself in. And when you compare, and I always reach for historic, precedents or analogs when I'm thinking about these things, but which is why it really pays to know history. But if you look at let's say, transportation in the late 1970s, if you're old enough to remember this, airlines were highly regulated. There was, the airline travel agents, as a result, were highly regulated, and it would have been impossible in 1976 to have Amazon deliver your stuff, FedEx. It just wouldn't have happened, because there were rules and regulations about who could fly where, how could they fly, all kinds of things like that. Jimmy Carter proposed that change. It was taken up by President Reagan ultimately, and you have this incredibly fluid transportation system that we have today. The other example is manufacturing. In the 1990s, manufacturing was facing an existential crisis in the U.S. due to globalization. If you could pay somebody 30 cents a day to make your widgets in some far-off land, that's hard to, makes it hard to compete. So what happened? Manufacturing and also logistics, they turned to mechanization, robots, really sophisticated, conveyance systems, and 3D printing. It just remarkable transformation. What happened? Healthcare has never had to do that. Healthcare has been an employment program for the U.S. Barack Obama made an absolutely express decision. All right, we're going to, when you passed the Affordable Care Act, they could have deregulated the hospital business and made it less sclerotic than it is today. They decided not to do that because we're coming out of the great financial crisis. And what are we going to, we can't lose people in healthcare. So what you're left with is a system that is crazy dependent on labor, insanely dependent on labor. And I think I have a slide in there on the wage rates.
Yes, the next slide,
is that the next
number 8.
Yeah. This is about one of the most depressing slides that I have. If you look at that line, that is your average hourly wage for a healthcare worker in the United States. It's got maybe a 50 basis point than that slope to it.
Yeah.
You know, between 2012 to the pandemic, 2020. Then all of a sudden it starts hooking up pretty dramatically. And now you're looking at wage rates, you know, for in some areas well above 30% above where we were pre-pandemic. So getting people back into the workforce is requiring more dollars. Now, if you look pre-pandemic, you didn't have to pay up to get more workers.
Right.
You know, you look at those the way in which that chart is deploying more and more people.
Yeah.
But with absolutely no movement in the wage rates. So those people are coming out of other sectors into healthcare, and now with the prevailing wage, the loss of population, et cetera, you have workers making greater demands, and they're doing it.
Yeah.
and hospitals are having to pay up, and they've only recently, you know, realized, oh, good Lord, you know, this is permanent. You know, we're gonna have to figure out how to get out of this box.
Yeah. So I'm assuming this almost directly impacts their margins, correct?
It does, but it's so delayed.
Okay.
You're not going to see it yet. And the reason for that is the way in which healthcare deals with inflation is by rationing care. I think most people think, okay, you're sick, you go to the hospital, and you get treated. In an emergency situation, that is most definitely true. In a non-emergency situation, and I'm thinking typically a behavioral health kind of crisis, or something more of a chronic care crisis, they're gonna send you home as quickly as they can, because you represent low margin and low margin areas of the hospital that are typically now very much understaffed. Surgery, you know, crisis management of crisis trauma, those things are probably getting taken care of. But if you're, you know, a hypertensive, diabetic, some person with renal disease, you may be sent home sooner than you should. So that's the first response to inflation in healthcare is just ratcheting back the throughput that you typically would have had. You may have admitted that patient 3 years ago, and today you try not to. And that could be contributing to the excess deaths we're seeing. People aren't getting the care we need. We can see in the data, you know, they're when they come into inpatient stays, you know, the reasons for inpatient stays have changed a good bit since pre-pandemic. The other way you cope with inflation in healthcare is by asking payers, you know, to pay more. And they are going to have to do that if you're HCA and you have great markets and you have great concentration in those markets. If you are a community hospital or a middling level system, you may be on the receiving end of payment cuts. The advantage, we're going to be in this very sweet place here probably for another year, because the insurance companies have padded their reserves during COVID. So in many cases like Humana, the reserves nearly doubled. And they can reverse those reserves at their discretion to keep pressure off their networks, keep pressure off of their reimbursement rates. The real challenge is going to come after those funds are exhausted, and after so probably mid 2024 would be a place a mark to put in the stand to think about when you might need to change strategy. But right now, and this is why you're seeing so much interest in healthcare, you know, from institutional investors and kind of a relative overperformance of certain subsectors of healthcare, is because, you know, there's not going to be a ton of pressure. And to put it in Hedgeye terms, you know, we have an inflating environment for healthcare. You know, we have a growth environment, and through reimbursement, we have kind of a dovish monetary policy, if you want to frame it up that way, which I think is what quad 3, right? And that quad 2. I'm sorry.
No, quad 2.
And that's quad 2, and so that's where we're going to be, you know, for the at least I'd say a year and possibly a year and a half. So, you know, Katie bar the door.
I mean, am I correct in saying that this is, I mean, certainly in the last decade, quite a different setup inside of healthcare than that we've seen?
Yes, in the sense that, we have a dovish reimbursement
Right.
policy.
Okay.
The government has a formula it uses, and that formula, takes into account ECI, Employment Cost Index, which is a favored labor metric for the Federal Reserve, and it increases payment with those costs. It does it on a lag, which is why you see a lot of hospitals complaining, right now. But that lag eventually it catches up with reality, and you're in pretty good shape. The commercial payers, they need to keep major hospital systems in their networks, otherwise they lose members. So, and they sit on a bunch of reserves, so they can pay up if they need to, depending on the market. And that is definitely different from certainly the Post Affordable Care Act era, and COVID was kind of a watershed there.
Right, right. And in terms of the relationship or the quote unquote negotiation that transpires between the insurers and, say, the big hospital networks, or just kind of the healthcare side of the equation, how does that work? Is there can people kind of track some of this stuff inside of 10Ks or anything like that,
well, not really. It's pretty opaque and by design, because it is so competitive.
Right.
But generally speaking, what happened? The starting point is the Medicare reimbursement rate. So if Medicare has increased rates 2.5%, a typical ask would be plus 100 basis points from a commercial. The expectation is commercial will pay more than Medicare. The hospitals say, we don't make any money on Medicare, we lose on Medicaid. Not really true, but that's what they say. And so we need to make up our margins on the commercial. So that's the starting point. And then it depends on the insurance company. If, for example, Blue Cross Blue Shield, nonprofits, been able to leverage a posture of anti-competitiveness, which now has to come to an end, have been able to leverage their very close relationships with their state legislatures. They're a lot more forgiving on price. They're a lot more forgiving on a lot of practices. A United Health Group that has to report to its shareholders, they're much less forgiving on price. But because they're much less forgiving, they also don't have great networks. And so people tend to, shy away from UNH. UNH is a huge insurance company, but it's usually comes in second or third in many of its markets. It's a few where it's first, like in Minnesota, but it's behind the Blues plans for sure. So your negotiations, the things in play are, how much market strength does this provider have? Atrium system in Western North Carolina has a ton of muscle. They set the price, you take it for an insurance company. In much more diverse markets, in other states, it's going to be a different conversation. And it depends on what the member flow looks like. If you are an insurance company and you are number one in your state, and you represent good patient flow, you might take their price. Be a little bit more congenial about it anyway. So there's a ton of factors, and it's hard to say one thing or another is going to happen. But generally, I could say through the rest of this year and into next year, the friction that and this is a change in attitude towards mine, the pressure, because of all this money that is built up in the system, isn't quite there. But come 2024, or mid 2024, we should see the effects, and those negotiations are probably going to get tougher. And in some ways, they may be tough now for things for providers that don't have market stroke. Insurance companies that don't have market stroke, but generally speaking, I think we're looking at a year of bliss before the storm, the calm before the storm.
It's a great time to get caught up and really dive into kind of the structure, which is an even better reason to have you on the team as a research to your sector itself. But why don't we finish off, Seltz, if you bring up the macro slide there, we can kind of run through the last couple bigger themes that I know Emily would love to hit on, and I think it's a great way to sort of leave people with some bigger picture things to be reviewing here in 2023.
Yeah, so in healthcare, the labor situation is off the boil. We had fourth quarter 2021, contract nurses getting paid crazy prices, $6,000-$7,000 a week. That has stabilized and actually improved. It doesn't mean it's where it was in 2019, but if you're a hospital administrator, you at least know what your day, week, month are likely to look at. Job openings had declined sequentially. They're back up because the pressure, that excess mortality we talked about, that is preceded usually by healthcare and very intense healthcare. So that it's the rub, the tension is still there. It's just not quite as insane as it was. Inflation is making its way, as I mentioned, into the payment system, and this is going to present us with conflicts between providers and payments. And it's also going to provide upward pressure on PCE when you start thinking about macro trends, and the pivot and the higher for longer and all that. That upward pressure on PCE is going to persist throughout 23 and potentially into 24, and maybe even get worse in late 24. And that, of course, is the Fed's measure of these things. There's a great article out of the Dallas Fed that I would encourage everybody to read to understand that. And then the last thing is fertility, mortality, and utilization. Mortality, we've already covered. As I said, this is now getting being acknowledged openly by at least 3 companies, healthcare companies. I think we'll see more of that because we're getting to the point now where what are you going to blame this on? There have been multiple attempts by the CDC to fix it on something else. There was long COVID, but as I said, we don't have enough data to know what the role is there. We've got one observational study that isn't worth much. And then, another story was, it's people get COVID, they have heart attacks, but that was kind of defeated by a Thai study on young men. So it's just, at some point, and it's starting to happen, everybody's going to have to start asking the question, what's going on here? And I don't think it's entirely, as I said, Miami, I don't know that you can fix this on vaccines necessarily. It could be that people are waiting 9 and 10 months for specialist appointments and dying in the meantime, or they're not going to the ER because they're still scared of catching COVID. So there's a lot of factors there, but nonetheless, it's really a 5-alarm fire when you look at the excess that we're coping with right now. And fertility has been topic of conversation mostly in non-U.S. countries because, first of all, you need excess fertility to replace the excess mortality. Mm-hmm. We're not quite seeing that, but where some Asian countries and European countries are actually seeing significant declines in fertility. Haven't seen that in the U.S. It's not shown up yet. And then, of course, all that adds up to utilization, right? If you're going to die or you're dying, you're going to seek healthcare. So we just need to keep an eye on fertility. Mortality needs to be addressed, and utilization will continue to be under pressure throughout 23, and especially in light of the labor challenges.
Fantastic, Emily. I mean, I'm quasi speechless because I've learned so much. I'm digesting it all. That excess mortality chart is quite alarming.
It's crazy. It's nuts.
It's crazy. Yes. It is. It's right here. I'm looking at it. It's like it is crazy. But again, thank you for sharing your knowledge. You're a wealth of knowledge, and I'm so grateful. my wife loves healthcare and healthcare policy. So, at Hedgeye Love, I want to make sure you guys get introduced.
I'll look forward to that.
Awesome. But for everybody at home, thank you for tuning in. If you enjoyed what you heard here and want to learn more, please go check out Health Policy Unplugged. It's Emily Evans' Sector Pro product. She is an absolute gem, and really grateful for her taking her time this morning to run us through everything that's transpiring throughout the healthcare space here in the U.S. and globally. She is a wealth of knowledge, and the fact that we brought in data points from the Civil War to the earliest 20th century to now COVID.
Don't forget the Black Death.
Oh yeah, and the Black Death. That's right, the Black Death. Oh yeah, we've gone all across the page here. Thank you, Emily. No, awesome. Appreciate your time as always. And for everybody at home, we will catch you not next week. We're on a little bit of holiday, but the following week we will be back in studio at 11:30 on. I'll just follow up with the date. I can't remember what it is. So thank you, everyone. We'll see you soon.